I'm so excited to have you two on the stage with me. Joe was on the stage 18 months ago at the festival. He had a pretty big announcement there. This is our follow-up to that. We're going to hear how things are going. Before we dive into that, let's have you two bring us to how you got here. Let's start with Andy. Andy Schwartz, you're the CEO, co-founder of Bleakley Financial. It's been in business for 40 years. Give us a little personal tidbits. How'd you get here?
Sure.
And then we'll get started.
So I have a twin brother who's one of my partners, Scott. So Scott and I graduated from a very prestigious university in South Jersey, Glassboro State College, just a little under Ivy League. And we were really there for two reasons, really low SAT scores, and we had no money. So when we got out of school, we went into the insurance business. Actually, we joined Northwestern Mutual, and that was in 1984. So we started out, we knew that planning would be important. We got licensed really early on the security side, and we just, kept growing the business,
Those drums, I want you to put your mic higher. We're going to outbeat the drums. Well, we could try to tell them to stop, but let's just talk louder.
No, it's fine, it's fine. And so, and then fortunately for us, we hired lots of great people, smarter than us, which isn't that hard. And we got to a point, a year ago, when we met Joe in March, that we had built something, and here we are.
I love it. And you have three girls.
Three girls. Yeah.
Three girls. And tell us where you live.
I live in, we live in New Jersey.
New Jersey.
So we're in Montclair, New Jersey, Spring Lake, New Jersey, and we have a place in Florida.
And he comes down to Singer Island, South Florida, where I grew up.
We like Singer Island. Yeah.
Love that. Thank you. Joe, give us your story.
Well, considering I'm from Zimbabwe, it's great to have the drums banging in the background.
I'm so glad you said it.
And I'm not afraid to talk really loud. That's the good news.
Perfect.
The accent is from Zimbabwe. And 18 months ago, we were in Huntington Beach, and I'd had this idea that the really good RIAs, the ones that are most interesting, had no really good partner to get together with. Because the financial markets, if you want a tier one private equity investor, they need to invest $200 to $300 million. The really good firms are 5 to 10 billion, growing rapidly. They don't want to sell control to anybody, so they need to raise money, but there's no good tier one partners who can invest 50, 60, 70 million. And I thought, I think there's an opportunity for the firms that have the most upside, that are going to grow by 20, 30, 40% a year. They need some money, but they also need expertise, because almost everyone's running the biggest RIA they've ever run right now, and they don't know what it takes to become a deca-billion-dollar RIA. And so their only choice is really to take some debt financing, which I didn't think was a smart move because it's very expensive and brings no value, or they sell to one of the mega firms where they give up all their equity upside. And if you're in your 40s, 30s, 40s, 50s, or you have plans to be exponential grower, you need to have money that actually doesn't give up your upside and that you don't give up control. Because the reality is most of the really good RIs have a very strong opinion about why they're in the business and what they want to do with their clients and how they want to treat their advisors. I certainly did, building 2 enterprises into deca-billion-dollar firms. I would never have given that up. So we did 6 rounds. And, at the time, nobody was backing private wealth management firms. And we did every one as a minority, like 15 to 17%. We did 4 rounds. None of them took control. And so myself, our team, the advisors got to decide the direction. And that's not possible today. If you have $5 billion, it's very hard to get the right size capital. And we made 1,000 mistakes along the way. I'm like, it would be very nice to have somebody who sat in the seat and knows what it's like, rather than a 32-year-old kid straight out of MBA who knows nothing other than the spreadsheet, who's going to tell me how to run the business. And so my partner, Terry Carlson, who ran Wealth Enhancement Group, prior to that was the head of All Schwab Retail. So she's our partner who helps the firms to execute. And we have a whole team of people, including the former CMO of Focus and Colony Group, to help with branding. We'll talk about specifically, and our goal here is very simple, to give you specific, actionable advice if you're building your own RIA that we have shared with Andy about what we've done in the first 6 months, so you can actually apply it in your own business. Because frankly, I don't like spending my time listening to people who tell me how great they are. I'd rather that you leave with some tangible advice that you can think about from myself and Andy, because again, this is an amazing industry, but everybody's trying to do the same thing. And if you don't do something different and beautiful, just like you guys have done here, reimagine what it means, you're just going to be cluttered and crowded out by the large mega firms that are investing millions of dollars that you don't have. If you don't have size, you have to have differentiation. You're not going to compete on price. You have to have a way of marketing and positioning yourselves that allows you to be markedly different than everyone else. So I hope that after this next 25, 30 minutes, you'll leave with some tangible advice that will be useful to you as the leaders of your franchise to do something really different than everyone else.
No, that makes sense. Joe, so I remember in Huntington, you said you were going to be very selective on who you chose to make this investment with, and I'm sure you took your time. So let's let Andy go first, because you obviously had to say yes too.
Sure.
You have a great firm. I'm sure you had lots of offers. What made you say yes? And I wanted you a little bit more personal. I just wanted to hear you say Zimbabwe, but you have 3 girls as well, so we know you two have that in common. There's some other things in common too, but Andy, why did you say yes to Joe?
So I might be the only person at this meeting. I never heard of Joe Duran. I don't pay attention to really other than our own business. And so we were referred to Joe last March, and by a good friend of Joe's, friend of ours that we respected. So we said, sure, we'll have a conversation. We probably had 5 or 6 very serious conversations with really good firms. We probably frustrated them because, you know, when you looked at Bleakley 6 months or a year ago, it looked like a band of pirates. But we actually had built a real business. But the problem was everybody wanted to, you know, my partner Mike Axelrod's here, you know, my partner Jack Cooney is not here, my brother Scott. You know, we built a really great sales organization. We got to about 10 billion in assets, but we realized that we didn't necessarily have, what got us here wasn't going to get us there. And I think something that's really important for everybody is, you guys are way smarter than we are, you know, for sure. Everybody's egos get a little bit big, I think, as they become more successful. And I think that it's really important, you know, to know, you know, what you're good at, what you're not good at. And we knew that we did not have the skill set, we didn't have the capital. I mean, we have completely reimagined our entire business in the last 6 months.
Yeah, we're going to dive into that a little bit more. I do want to ask you one question, and I'm sure Joe has an opinion on this, but your name is Bleakley. You have no Bleakley partners.
No.
Your last Bleakley partner is gone 25 years ago.
Right.
So I mean, I think that's very humble of you, but why keep someone else's name? Like, is that just selfless because it was going well? Like, why change it?
Because it doesn't matter. I mean, look, our name isn't a good name. I think when Joe first met us and he's gagging. Bleakley, you know, it's every time my CIO, Peter Bookvar, is here, he goes on CNBC, Joe Kernan, oh God, the guy from Bleakley, everything's bleak, you know. So we knew it wasn't a great name, but, you know, we have clients that know who we are. We had advisors out there who knew who we were. And to us, you know, we probably spent $5,000 on marketing 2 years ago. It just wasn't our focus, you know, so, and it didn't matter to me. The one thing we're not going to be a Schwartz, you know, what difference does it make? You know, my COO says, why don't we just call ourselves Ham Sandwich, you know? So, but anyway, that was already taken.
Look, I guess it was working, but maybe it's time to drop the Bleakley. But I thought that was an interesting. I was reading all about Bleakley, and I was like, well, where's the Bleakley founder? Where's that guy? Couldn't find him anywhere. I was like, I gotta ask Andy this. So there we have it. Joe, you were itching to comment on that.
One of the big things we're doing is working on branding. So when we joined, they had 3 things that we look for every portfolio company we're going to invest in. These 3 things you should ask yourself how well you're doing. Number 1 is leadership and strategy. Most firms are run by one advisor who makes all the decisions, is the bottleneck for every decision, and determines the future of the firm. And that's fine, except that it's not scalable or buildable. So somebody who's at 5 billion or 10 billion has one leader that doesn't have divisional success. Andy has an amazing team of people that he had invested, given equity to, were all participants in what they were building. He had one big gap in his strategy, which is, although everyone were W-2 employees, the advisors weren't. And he didn't know, he knew that he needed to solve for it. And by the way, this is a big issue for a lot of you. Bringing in advisors as 1099s, in this capital market, nobody seems to care, but in building a beautiful franchise, it matters. It matters if you have a bunch of advisors completely disaggregated who have no economic interest in your collective success. And so they had all
How
on
many
one brand.
advisors were 1099? All of them?
All of them.
When you say
ex-
all of them, how many is
including
that?
Andy. Well, not Andy, I think was Doe too, but all the advisors were 1099. And we said, look, they're all delivering the same thing. No advisors ever leave. They don't love the name. That was Collective Truth. But they love what you stand for. And a brand is more than a word. Your brand is the promise you make to the marketplace that you're consistently delivering. And they were doing that. Now, we'll have some news on the name in a sec. But one of the things we knew is if you have a great alignment in culture, moving them from 1099 to W-2 is not that hard. And in fact, we move 80% of the assets moved from 1099 to W-2. That's a massive equity builder. We increased the EBITDA exponentially. And now these advisors are part of a collective journey together. They now truly care in their pocketbooks about the future of the business. That's really important. So the first is, let me just quickly summarize the three areas. Your business leadership and your strategy. Who are you serving? How? How do you measure results? How do you track results? Most firms at 5 to 10 billion are too sloppy with data. They don't actually hold anyone accountable. It's, well, the CEO likes me and that's good. That's how I'm going to determine pay. And Bleakley was very good about data, client meetings, all the rest. Not good enough about client surveys, not good enough about employee surveys, not good enough about measuring and tracking results of the employees. So we very early on said, let's talk about how to improve the measurement and tracking of results. The second is your technology, what we call your platform, for clients, for advisors, and for back office integration. They had spent a fortune on the technology. And all we wanted to do was upgrade the client experience to add elements that make it truly unique. They had done an amazing job with advisor integration, back office integration, execution of strategies. So one simple question to ask yourself, how many of your employees and clients are receiving the full platform? Because if people are buying parts of your platform, you don't have an integrated business. And that's a major issue. And you see that with the mega firms right now. And then the third area for growth, direct, like your marketing message, inorganic and organic. What are your results for each of those areas? And that's what we track. And we saw that they were an amazing team, really good platform, and we knew we could help them with the inorganic. And we knew that we could improve the culture by just bringing those advisors in as real partners to the business.
So, Andy, from your perspective, and thank you for that, Joe, it's like remodeling your whole house, right? And trusting this contractor to come in with their people and tell you everything that you need to change. How did you take that? Like, tell us what that was like when Joe and his team come in and they just start assessing everything. And it's kind of your baby, and you've been doing it that way for a long time. It seems like you were really receptive, but talk us through how that felt from your perspective.
The first thing is, what's the purpose? What are we trying to do? If you're not trying to get better, if you can't grow and keep up with the market, then you're going to be in trouble. And so everything is moving so quickly. So we knew that we do a lot of things really well, but there's lots of things we don't do well. And by the way, I tell our management team every day, the mantra in our place is, a year from now, everything we do is going to be better. And a year from now, we're going to say the same thing. And 3 years from now, we're going to be embarrassed by what the work looked like. Like, I'm so embarrassed. Don't look at our website. It's going to change soon. But I mean, so we knew. But they don't tell us what to do. What's been great about the relationship is Joe and I...
That was one of my questions. I wanted to know if Joe's telling you what to do.
I mean, listen, believe it or not, Joe has opinions, okay, certainly. But the reality is that, Joe says, look, we run our business. They're here to advise. If it makes sense to us, great. If it doesn't, it doesn't. But there's someone from Rise that talks to someone on my management team every single day. And it's not necessarily about telling people what to do. It's more about how can we improve? What are we doing? And that's top to bottom. And so they have a skill set. And listen, you all run your P&Ls. The beauty of this for us is that at the end of the day, the business is about margin. And the one thing I'm noticing as we're interviewing lots and lots of what I would say small RIAs, only just a little smaller than us, although there's plenty that are bigger, everybody seems to be getting so big. Everybody's getting so big with headcount, but not necessarily with margins. And I guess the question is, are you just trying to build something that has the biggest AUM, or are you running an enterprise that is focused on EBITDA, margin, value creation, and actually making money. And I would say that one of the things that we've been really successful with before we met Rise was that we could bring advisors on, and we always shared. So, you know, we have our think tanks, and so that we share resources so that all we want our advisors to be doing, all we've ever wanted them to do, was go out and find money, service their clients, get referrals. We take care of everything else. And now what's happening is with Rise, we're just going to get much better at that.
I think that when you talk about M&A, it's kind of a sexy, hot topic. Everyone wants to sell their business. I think if you don't have your own organic growth, does it even make sense to take capital? If you don't know, if you can't grow organically on your own, you're just going to take the debt.
I just wrote a
Explain
piece for Citywire that'll be out next day or two about getting a piece of apple pie. My partner used to say, hey, they're handing out apple pie, go get a slice. We're in an environment right now where quality doesn't matter. And you can raise money no matter how you're growing. I want to just go back just for a second and double click on one thing. We're a minority investor. Andy can ignore everything we have to say, for the record. We have an amazing team of people that he doesn't have to pay for that bring help in accomplishing their vision. And their vision is to be 5 times bigger 5 years from now. To do that, you've got to think exponentially. You know, and one suggestion I have for all of you when you sit with your teams, add a 0 to everything you're doing. Just add a 0 to the amount of client meetings, the amount of advisors, the amount of acquisitions, the amount of lead gen you're doing. Just add a 0. And if you add a 0, move the decimal point 1 spot, you're going to be forced to think very differently about what it means. Most importantly, what's your role? How does the business work? How do you operate? And one of the things we challenge Andy's team constantly is this practicing at the top of your license? Is this getting the best of everybody on the team? So one of the things we do is help them think about strategy. And the first thing we did is come in and say, where are you right now? They'd never done a client survey. And we said, if we're going to build a beautiful brand, we need to know why your clients are with you. What word you want to own. And the word they're going to own is the word relationship, because they're in a lifelong relationship with their advisors and their clients. We're now building this incredible brand story. The name will be launched in the next couple of weeks, which we researched mostly from our client feedback. We then use that client survey for them to grow organically, because a bunch of their clients have friends and family they want to bring in. And you have to have an organic strategy underneath. And we're just started doing a TV station. We already closed our first account a couple days ago, a few $1 million. We have several multi-million-dollar leads coming in. You must have an organic growth strategy, because as an acquisition firm, if you don't have a reason that the underlying businesses are going to be improved, don't buy them. The problem is that these mega firms are ad hoc purchasing anything with a pulse. The underlying businesses are not superior because of the investment. And one of the things we said to Andy is, don't take our money if all you want is money, because there's plenty of money around. It will cost
And
you
he
less.
said no to that before. He had
Yes.
already said no to
And we said, you take our money because you really want to be exponential, and you'd like our thoughts on how to make it happen. And Andy and I talk every week because we want to. And I help him think about his role, because I've sat in his seat. And Stacy and Terry and the whole partnership team work with his team to build an actual dashboard that says, how do we measure and track results? How does everyone's pay align to that goal? These things, linking it all together, making it all aligned. It's where your time should be if you're the executive and leader. Your job is twofold: to set the vision of where you're going and establish the standards of how you're going to get there. It's not to do all the individual work. It's to actually ensure that the work is being done in a way that aligns everybody in a harmonious way. And we told Andy, we want to be a harmonious financial partner, and that doesn't exist. Almost every partner that comes in with money is in an adversarial position with you, because they only care about one thing: maximum exit. We do care about it, but it's secondary
not
to
your
doing
primary,
something
yeah.
really beautiful for clients and for the team that they have. And we fundamentally care and believe truly that Andy shouldn't do one acquisition if the underlying business is not better off for joining
For it.
Bleakley.
For it.
That is the underlying premise, which you should just pin on your forehead. I will not acquire anyone if I cannot improve the lives of their clients, their employees, and the fundamental firm. And you should not join anyone that doesn't make that promise to you. the problem is that mostly these mega firms are just like wirehouses. They have given up on their original culture, they've given up on their original mission, and it's now almost everyone controlled by private equity firms who don't give a rat's ass about your clients or your employees. Because they've never sat in your shoes. They've never been a fiduciary in the same way that you have. And again, I have nothing against private equity. I've made them lots of money and I love them. But they don't do things for the same reason that you do. And it matters whether you give up control or not. It matters for your employees and for your clients if they're pushing product and telling you to do more acquisitions that are not culturally aligned. So, the first thing for us, Andy, we will never put, and their pipeline went from 200 million to 8 billion in pipeline in 45 days because of our reputations. But we will not put anyone in front of Andy if we don't go, this is a great person, they care deeply about their teams, they care deeply about their clients, and their firm will be immeasurably better because they're joining Andy's team. That is the starting point. And it means being more selective, and it means doing it slower. But you're building a house of brick. It's not a house of straw. You want to be proud when you go to sleep at night about what you're doing, the partners you're bringing in. And unfortunately, that's very often overlooked.
Andy, I think I was about to bail on this, and we were just going to start dancing to those drums, but I guess they gave up, so we'll keep with the conversation. Andy, I want you guys to go a little bit in the weeds, not too much about the conversion of the 1099 to the W-2, because I think that probably was very beneficial in obviously the incentive, the way the advisors. How did it change the advisors? You don't have to.
It's been probably the best part. I mean, both the advisors and the manager team, all the stakeholders now have skin in the game. They all benefit from the equity growth, and the equity growth we think will be tremendous. One of the advantages is if you join a really big firm, the equity is already so valuable. So they've made lots of money, but I think that if you're going to join someone, if it's about equity, you want to make sure there's some lift there.
And you felt like their culture, you felt the attitude, did you feel energy?
It's unbelievable. I mean, we moved into new space in the middle of all this, but it's unbelievable. I mean, I spend 20 days a month in Florida. I don't even want to be in Florida this winter. I want to be in my office. Everybody's so excited. It's like, the vibe is great. Everybody's really motivated. What Joe was just saying, whenever I talk to a prospective advisor, I say that there has to be 3 things that have to be true, or I do not want you to join us. I'm an advisor. I keep, I don't know, Joe, don't listen to this. I keep 40 appointments a week. I'm working my way down. I'm building out my team. I'm a player coach. I'm an advisor. I know exactly, we do the same thing, assuming you do that. A lot of people don't seem to do that anymore. But the reality is 3 things have to be true. If you join us, when we're done, you have to be happy. Because I don't want any advisors as part of a firm that aren't happy. Because at the end of the day, it's not so much about us. We're good. We've had blessed careers. When whatever happens, this ride that we're on, and it's going to be a long-term ride. It's going to be a 20-year ride. There'll be stops along the way, and people will take their equity and they'll cash out and they'll move on and do whatever, depending on how old they are. But they have to be happy. The second thing is you have to be able to grow your business more. Don't join anyone that can't help you grow your business more. Don't take the check. Because it isn't about the check. Even the equity. You've got to be able to go somewhere they can actually help you grow your business. Everybody that we've brought on, and I think that's what attracted these guys, was our advisors grow way, way above industry average. And then the third, the economics have to have been great. So whatever this journey is, it had to have been really great economics for them personally. Otherwise, don't do it.
I do love how quickly it's internalized the 3 pillars, which I love it.
Oh, listen, I don't have a thought in my head, but boy, can I repeat and imitate.
I love it.
It's perfect. Oh, you kidding me? That was my second call with Joe. That's what he said to me. I said, I'm going to use that. I don't know if I'm joining him, but I'm going to use that one. Absolutely.
So for all of you, when you're looking at your paths, the advisors themselves have choices. And because of the platform they have, when you're presenting this choice, it has to be an election they make. And 70% of the advisors said yes, and 30% said no. And guess what? We're going to make that 30% go, boy, I probably should have done it. So our collective path is to make sure that we are much more transparent. We're very transparent about what we're doing to grow the enterprise. We've signed over $1 billion, 2 deals that are one's definitively signed, the other's an LOI in the first quarter alone, that We're going to grow the business and the EBITDA of the business. We have a huge pipeline to keep doing every quarter, somewhere between $500 million to $2 billion in new assets every quarter with completely aligned advisors. And all the people who are in here get to participate. Now ask yourself, if you're joining a mega firm, what difference does it make if they add $1 billion or $2 billion? It barely moves the needle. But a firm at this size, if you can add $5 to $10 billion a year, you're doubling the equity value potentially for everybody in the ride. So that's the advantage if you have a business, $3 to $10 billion. Now what Andy did not have to convince them is a balance sheet that allowed to say, we have tens of millions to make this reality. And frankly, Terry, the team, brings a level of credibility. We know how to do this, so that they can envision that this is going to be a billion-dollar brand in 5 years. And that is what we're doing. Like, we want to create the next unicorns in wealth management, meaning billion-dollar brands, which is probably for most firms, 25 billion or so in assets, 30 billion in assets, assuming you have a 25%, 30% margin. We don't expect a straight line. Like right now, we're going to be spending a lot on marketing. We're going to spend a lot on figuring out the staffing and bringing in, I think they brought in a dozen high-level management team, and we don't care about profitability until it's time to care about profitability. What we care about is, we building the pillars to have a deca-billion-dollar RA, many deca-billions. And he's got the team to do it. There's work to do. And the thing we did in the first 6 months is clearly articulate, what does year one look like? Take that 5-year vision and reverse it engineer into annual goals, break it down into quarterly targets, so that everybody knows what are the elements we need to do. And one of the things I'll share with you, we all spend too little time on our branding. I can't wait for you all to see his website in 2 weeks. I encourage you to go look at Bleakley's website today, and then we're going to blow your socks off in 2 weeks. Really. Because there's so little imagination in our industry. Everyone is so boring. They don't think about, we're all telling the same story, selling the same thing. And it's boring. It's boring to our clients. We do beautiful things. We change people's lives. We can tell that story in a much more interesting way. And that will be a beacon. And I like to think about, if you're building a great lighthouse brand, it needs to be a lighthouse. It needs to tell a story that's unique. And at our size, at 5 billion, 10 billion, 20 billion, you want to own a niche. You want to be very clear about the market you're going for, not just for clients, but for advisors too. You are not all things to all people. And Andy hates hearing this. He's great for all RIAs, and he's going to punch me now. But he's really good with really growth-oriented RIAs, younger advisors who want to double their size in the next 3 years. That's his home. That's his sweet spot. And so his advisors, their growth, their organic growth, because they're in the earnings growth curve of their careers. They're in their early 40s, mid-40s. They want to grow their income. They've got young families they want to fund. And when you attract a very specific kind of advisor with a kind of story that's going to be good for them, that you can tell them, we're going to be your partner for life. We're going to grow your income 3x in the next few years, and you're going to earn equity in the voyage that we're going to grow at the same rate as your income growth. And you have very little to give up, and you're going to work with lovely people that allow you to do the thing you're great at. That's a great story. And we know that we've got a great partner in Bleakley, soon to be named differently.
I can't wait to hear the new name. And this bromance you guys have going on, what's going to happen when you choose your next partner? I know you're not going to
cry. He's going to cry. I know
I can see it already. This is not going to end well.
We're not good sharers.
Yeah.
Look, I'll tell you one thing. This is an amazing industry, and you can have a lot of fun in it. I know we like to dress up and act all serious for our clients, but bringing joy and love into our industry, it's something like one of our mission statements at Rise. We have 3 very simple rules. We're good people. We only work with good people. Good people means we do what we say we're going to do, and we do it with kindness. Number 2, what we do matters. We will only invest with exponential thinkers who want to grow. And last, we love what we do. And, you know, as leaders of your enterprise, it's so easy to bring joy into your enterprise. You know, when we were building United Capital, what made us different is we brought emotions into the discussion. It's the area nobody wants to talk about. You want to bring people in, bring passion and joy and genuine happiness to what you bring to work every day. And it's remarkable how few, we were just talking yesterday, my biggest piece of advice for Andy, take time to recharge. He works harder than I'd ever want
He
to.
told me he doesn't want to go to Florida anymore. He just wants to be in the office.
So
No.
I encourage you to grow in other ways than in your business and have fun and make sure you have enough energy to bring delight to the people that work with you. Because again, like this is a great example of how your life should be. There's no reason to be sitting cooped up eating rubber chicken in an awful hotel lobby. You can do it at the beach and actually get just as much out of it. That's true in your business lives too. It's true for your clients too. Like if you talk more about the delight of being alive rather than when you retire or when you die, let's talk about now, what we can do now to make your life better. And it's an area where most wealth management firms spend far too much time in the future and not enough time in the present. It's remarkable.
Joe, you know your reputation. Everyone knows your story. They know the business you built and sold. You have a very, very amazing track record. But you also understand the joy of fulfillment. And no matter how much money you make for yourself or your client or your family, if you don't feel fulfilled, then what's the point of any of it? And I've heard you speak about it. I've heard you write about it. And it's really inspiring. I think, obviously, that's why Andy fell in love with you. But nice work. I think that it's great for the industry. People love to hear you talk. And I like that you always make that part of who you are and what you're doing and the projects that you're working on. So, Andy, I think that was nice for you to have. Can you tell us, we only have like a couple minutes left if anybody has a question. But before we go, Andy, any suggestions for anyone that's looking to sell or to take capital, anything for the audience that you would give suggestion? You turned a lot of people away before you chose Rise Growth, but anything for the audience that you would recommend?
It's much more about the culture. It's much more about how much can they help you. It's much less about the actual, we all get stuck on multiple. So the conversation always starts on multiple. But if any of you have been involved in these conversations, multiple's only scratching the surface. Because I'll give you a 25 times multiple if I'm a PE guy, if you let me work your EBITDA down to nothing. And that's the game everybody plays. So the reality is it's not so much about the multiple or the cash. It's really how can they help you double, triple your business in the next 5 years? Can they get you to get to where you want to get to twice as fast and be twice as large as you would have on your own? And that's what I'd be focused on. Because in the end, that's the win. That's the win.
And look, when we look out at the future, when you're taking capital, the three things you want to protect, please don't forget these, they really matter, and your source of capital will drive this. Number one, your culture. Your culture is determined by how people get paid, no matter what anyone says. So the reality is what you measure is what people do. If you bring in a private equity investor or you sell to somebody who's going to take control of your business, they're going to determine what gets people paid. And that determines the culture. So first, culture. Number two, financials. If you don't have control over how much debt you bring in, what the form of equity is, it absolutely affects your outcome. So if you're at one of these large mega firms, ask them how much leverage they have. Some of them have 8, 9, 10 times leverage. Does that mean they can invest in organic growth? At a fraction of what they would like to. What does it mean when you get a private equity investor, they take on a bunch of leverage, dividend out to themselves, their payment, and you're left with this business with no free cash flow? Again, that's where we are right now. So having control of your balance sheet and financials. And then third, what's your strategy? What determines what success looks like for you? Those three things, your culture, your finance, your strategy, that's going to determine the kind of investor that you want to have. And I encourage you deeply. I know that everyone thinks about multiple, but if you're taking a minority stake investor, the multiple is not as important as what they do for you. If it's dead capital on your balance sheet, and they're telling you what you can and can't hire, and what you can and cannot spend on, which we never do, then you're determining your entire outcome. And it's one of the reasons we exist, to say, look, there are smart ways to reduce your EBITDA, and there are stupid ways to reduce your EBITDA. And we helped him to identify this is a smart spend. Bringing in a chief growth officer is a good spend. It's expensive. It's going to reduce your EBITDA, but it's worth it because it's going to grow your EBITDA down the road. So when you're bringing in an investor, asking what are the terms of the money, and do they bring any return to the balance sheet other than cash? And that's one of the things we didn't know that people would be interested. It's interesting now. We launched 18 months ago. Now everyone who's a minority investor brings value to their underlying investment. So I asked a simple question: who's there to do it? Like, who's actually sat in their seat? And I put Rise up against anybody in the industry for a team of people who actually have sat in the seat, know what it means to go through a bear market, know how to communicate with clients, know how to tell a story that delights people. So again, and the industry is in a place right now where I will just suggest that the mega firms right now who are dictating the terms of the industry, who frankly look just like the wirehouses, who have no distinct, really beautiful thing they're doing, that I want the independent advisors to compete and beat their asses. Because honestly, it's to me embarrassing how little good things are being done on a global scale. And we don't need to be replicating Merrill Lynch and the other wirehouses as an RIA. And yet that's what most of them are doing. It's a bunch of independent advisors using a platform, but no unified story, no message. I will exempt firms, by the way, like Fisher, who has a very specific story and says it over and over again and spends a fortune on marketing. And Ken is, I know him well. He's a brilliant guy, and he's built something that everyone who goes to Fisher is going to get the same thing. I have a lot of respect, too, for Peter Maluk at Creative Planning, who's building a more unified firm. And for some of these others, what do they stand for? And if you have the opportunity to build something, what do you stand for? Which is what a brand is. It's a promise made, consistently delivered, making sure that you do that.
Thank you for all your wisdom. They're about to play the Academy Awards song on us and kick us off. So no questions from the audience. We don't have time, but are you guys coming to the concert tonight?
Sure.
Concert on the beach. Don't miss it. Come on, Joe.
I've got a dinner, but I will be here later.
All right, awesome.
Hey, thank you,
for your
everyone. I hope
wisdom.
you have a great day.
Thank you so much for coming out.